All right, now this is an important talk, so we're not gonna skip the important parts. We're just gonna give you the most critical information at this point, and that's all you need, right? So we're gonna talk about situational investing. This is one of Dr. DeLito's favorite presentations, and I know why. I mean, it just really showcases what VectorVest is truly all about, from soup to nuts, you know, and everything you need to know. And so this whole presentation is about recognizing what the market is doing and implementing strategies that are consistent. And so what you've seen so far are all the tools that you're going to need to make that a reality, to know what the current market situation is and to implement the necessary things to take advantage of that situation. But what I'm going to do is put it all in a logical order so that you really understand what we mean. So let's do that. Now we're going to come to this here in a second actually. There's going to be 4 strategies that we're going to showcase and 3 ways to get them done. We're going to do take a look at least 2 different good riding the wave options and talk about why I really like them, and I really like them for everyone. And there's a big reason why. So we'll come to that. What I want to do now is get right into the software. As I told you, man, get me out of the PowerPoint. Let's get into the good stuff. All the power of VectorVest is right in that software. Okay. So what we're going to do first is go to my favorite place in the whole platform, because everything that you do needs to start here. And that's the home page. We're going to start right there. We said recognizing what the market is doing. That's step number 1 of this process, recognizing what the market is doing, and then implement the strategies, right? So what is the market doing right now? You guys tell me, you know. Okay, do you remember the last time I showed you the first red light when the market MTI was above 1.6? And what happened next? And you don't know how far down is going to be. So I don't want you to feel like this means that the market is going to go on some horrific downward spiral. But what we do know is that downside risk outweighs upside potential. So as bad as you want to go home and on Monday start clicking those fingers on those computers and looking to buy stocks, now is not the time to do it. But when will be the next time to do it? We start to see some green lights, particularly in the price column of the color guard. All green lights are not created equal. There's always a first green light and a last green light to every market rally. And so by that logic, or by that reality, by that fact, it's not even logic, it's fact, do you think you should put a heavy emphasis on the first one or the last one? On the first one, right? So that's where you want to start, is just realize everything you really need to know is right on the home page. Everything I'm going to show now is kind of the underlying information on what we're displaying just right here with the color guard. So where we're going to go next is the market timing graph. Jerry's going to click on however he likes to get there, but probably graphs and then market timing graph. And we'll just start with a 1 year. And all I want Jerry to put on there is the price of the VectorVest composite, which is representative of the entire stock market, all the shares that we track that are traded. Everybody realizes that now. Okay, so that's what's on the top. This is the stock market behavior over the last 1 year. Now, what's one observation you can make from that, or at least one that I would make, is that markets do tend to go up over time, do they not? Okay, so we can make money with high relative safety stocks if we give them a long runway, and I showed that this morning with birthday game. You remember that? So given time, high relative safety stocks will take advantage of that phenomenon. And the further that Jerry, and he doesn't need to do this, but the further that Jerry would drag that back and show you more data, the more evident it would be that stock markets do in fact go up over time. So we all agree on that. Now, even though that is a reality, and it's really easy to do, there are some significant things that we haven't talked about yet, like how fun would it have been those 40% annualized rates of return when the dot-com bubble burst? How fun would it have been to be long on the COVID collapse, or at least the vast majority of it. How fun would it have been to be long in the financial crisis, right? So what we don't show in all that testing is the 30, 40, sometimes 50% drawdowns that those portfolios would incur before you eventually get back to those 40% annualized rates of return. Make sense? Yep. All right, and I want you guys to know that we realize that too. But if you can stomach it, it'll get the job done. That's the other message, okay? Not for everyone, certainly. Not for me, because this is what I like to do. What we like to do is say, all right, now within that global rise in the stock market, there are ebbs and flows like the tide on the ocean, right? Think of a harbor for a second. When the tide goes out, what happens to all the ships, even the battleship? They go down. They go down. Even the battleship. Battleship being Apple, Google, okay? What happens when the tide comes in? They come back up. They come back up. Even the one that's got 37 leaks and they're plugging them up with corks, you know, that little dinghy goes up too. And sometimes that little dinghy gets tossed about pretty good, you know, and it goes up even faster than those battleships. See what I mean? But the name of the game is buying stocks in rising markets. And so what we like to do, it requires patience and time, realizing, again, it's an art form. You got to work at it. You're human. You're going to make mistakes. But the better you get at letting marks come down as far as they're going to go, and then get on the good side of this next up wave, the better off you're going to be and the better you're going to do. And so we're going to talk about recognizing situations. When a market comes down enough, this is what you live for. You tend to get about 2.5 of these opportunities every year in the stock on average. Some years, heck, we did this in the Jockey Club, even in the worst year, 2022, I think we did this next process I'm going to show 5 or 6 times. Because markets had come down enough to where it's like a rubber band, okay? When stock markets go up too fast, what do? They snap back down. But when markets go down too fast, what do then? They snap back up. And those are the really fun ones, okay? So what we want to do is let that rubber band get stretched way down, and we know that in VectorVest by a couple of measures. The most important is actually the buy to sell ratio. Jerry's got it on there. Beautiful job, man. When this is a requirement. This is all in your slides. Guys, I'm going to try to tidy this up into 30 minutes, okay? When the buy to sell ratio goes below 0.2, we are searching for a bottom. Now, the key term there is searching, okay? We are searching for a bottom. And this one was real tricky, this last one. Because normally, and it is a V, most bottoms are V, most tops are long. You know, they're protracted. They bounce around a lot before they inevitably fall. Most bottoms are a V, real quick down and real quick back out, okay? And that's what you see here. And normally that explosiveness comes like day 1 or day 2 on that rebound. This market didn't really heat up until the after hours and pre-market on approximately 11:01. And I think this is 11:02 right here, Jerry. Show that one. This is what you're looking for, okay? You're looking for a market that has made up its mind that the bottom is in. And that can sometimes come. I don't have the time to illustrate every point. But if you do enough study of the VectorVest composite, you'll see sometimes that big tall candle, that's on the very first day off the low. And sometimes it's 2 or 3 days later. This is pretty late. But it's usually within the first couple of days. But what do you feel? Just looking at the market, do you feel like this market thinks it's found a bottom when you get to that big tall candle after the gap? Yeah, that's called a blast off gap, okay? There's gap. I gotta keep it together, Steve. There's so much that wants to get out, okay? Now, when you get this one, what do you think, if we're recognizing a situation. What situation are we recognizing? We're recognizing that the market is blasting off. So do you think your best opportunities in the stock market are Google, Visa, Apple, GlaxoSmithKline? Nope. The name of the game down here is what we call bottom fishing. And bottom fishing is a completely different art form. You have to sort of forget everything that you've learned to this point. Because what you're going to do is you're going to buy the blood. Warren Buffett has always said it the best. You want to learn to be able to buy when blood is in the streets. And the bloodier it is and the more people that are laying on the ground, the better the bottom is going to be. Okay? Just about the time that you feel that you want to start stuffing money into your mattress, it's that bad, there's a big bottom coming. And it's coming quick. Okay? This one, we haven't had that kind of blood. This isn't like the financial crisis and so forth, yeah, or COVID, or whatever. So this one took a little while to take off. And when it did, I'm going to show you a very important recipe here. If you're unsure, when the market comes down and it starts to take off, if you want to be as sure can be in VectorVest, this is my golden ticket for you. I like to see the bottom fishing searches participating in that day. And big. The bigger the better. So what we can do is we can go to the views and go to 11.2 in the VectorVest views. So this would be, hey, the market took off today. Steve said, good, we want to look for that explosive day. And if I'm an expert, maybe I already went long and did this. Maybe I have the derby and I can see the bottom fishing searches are going crazy. Or maybe I don't. And I can still look to take action the following day on follow through. That means market continues to move that way. Okay? What do I see in here? Do I see bottom fishing strategies in the derby searches in the views? Yes. So this is important. It's right in VectorVest views. I prefer to see all of them, all 5 bottom fishers. But this is 4 out of 5. They're moving. Bottom fishers are moving. Now there's one in here called bottoms up. Has anybody ever heard of bottoms up? Okay, I hope so, because if you go to viewers and you go to trading system viewer, the very top trading system we have. And it's only up, what, Jerry? Let's see, 199% this, well, come on, man. Why can't you do 200? Was 202? Well, yeah, the market's going down now, right? Okay. All right, 29% this last month. Now, this isn't the first day it's been at the top. Anybody that's come into this trading system viewer, at any point throughout 2023, it's been at the top. So let's go back over into Unisearch at this point, and Jerry's going to match up that date again. We saw the market take off. We saw bottom fishers take off in the views, and we saw our favorite friend, the top performing strategy in VectorVest, in that list. What do you think you ought to do? Some of you are saying, I don't want a heart attack, man. Because they already know these stock prices are fairly low, okay? But everything in VectorVest is screaming, buy bottoms up. And here's why some people are having a mild panic, okay? Go to the price. So the price is $1, you know. So here's the deal. We'll show you in a second. You could up that. You could use there's many bottom fishing strategies. But this is the one, man. And does it mean that you're going to take your entire nest egg and put it on the line on bottoms up? You'd be out of your mind. Okay? But what can you do? Hey, man, you'll be surprised what 20 grand can do in some of these bottom fishers. That's not a lot of money, you know? So watch. Quick test those suckers, Jerry. We got this on 11.2. Quick test those suckers, man. Woo-wee. Yeah. Look at that. 201, 94, 71, 66, 41, 38, 23. Woo. That's why you don't want to load up until it gives you a heart. A couple stocks going to give you some, going to give you some heartburn. Usually you're going to get them. On the very best bottoms, you hardly get any at all, typically. Okay, now that's running it all the way up to here. That's 38%. Jerry, take this back. Let's just see how they did, I don't know, over about a couple of weeks. Yeah, we're still before the confirmed up call. Run it. All right, it took them a little while to get going, didn't it? Some of them are going nuts, some of them aren't. And so money management becomes another step. And we're going to show you later on in this slide set how to manage these things properly. to really, be sure that you can stay with the campaign long enough to realize what inevitably is going to be stellar gains. So this is another week later. Yeah, now it's 8. If you went another week, it's going to start really gaining traction. Now, normally, this has been a wild market, It's good to see the VectorVest principles and everything still hold up. But everybody's been so nervous about this market, they really didn't want to buy these small caps until recently, And that's a little bit unusual. But there they go. And we had every signal in VectorVest to think about taking advantage of that. Now, if we go back to the market timing graph, once you get 2 to 4 weeks off a bottom, and one of the cleanest ways I can explain this is once you see a confirmed up call, you typically want to start transitioning out of those bottom fishers if they've already made you a lot of money. Because traditionally, and I could show you thousands of tests that would back this up. I've got them on a simulator product, okay? Literally tens of thousands of tests. So typically you want to start moving in another direction. Or if that was the small denomination of capital that you set aside for bottom fishing, then what you want to think about is now putting a larger denomination of capital into the market once the market moves up enough to where I'd say even the MTI crosses above 1. What are we recognizing when the MTI crosses above 1? The underlying trend that was down and created that bottom fishing opportunity is now what? It's maturing. It's healthy. The underlying trend is up. It's time to start transitioning towards healthy stocks, okay? And so if we go back to Unisearch, we could do a transition. One of my favorite, I would call, Dr. DeLito always said, and I've completely 100% have seen it in reality in my own portfolio. This is the time to go what we would call high momentum. All right, when the MTI comes off these lows, getting those bottom fishers, hopefully they do you a lot of good. And then when the MTI eventually crosses above 1, that's when you can take a much bigger piece of the pie and put it to work in high momentum stocks. And high momentum stocks can be anything from top VST. Anybody ever heard of the Midas Touch? Man, I'm going to tell you, if you've never heard of the Midas Touch list, you need to hear about it now. So that's why we're going to show it. I use that list every single day. So it's really pretty good all the time. Okay? But it's going to really, the really fun times in these high momentum stocks are going to be when you've got some healthy market activity behind you. And so what we're going to do is change this date up here, Jerry. That date that the MTI went above 1, I believe, was November the 14th. Okay? So on November the 14th, we're going to do Midas Touch percent price change. Anybody that's been around me long enough knows that I really prefer, Dr. DeLito loved this sort too. And the reason is we want to find not only the ones that are high momentum, but the ones that are really starting to take off. Okay? And so what this does is it takes that Midas Touch list and it says, all right, give me the ones that are really moving percentage-wise that day. And so you got MYO here is up 16% that day. Well, you missed it, right? The run's over, party's over. Man, it's blasting off, man. Why is it going to stop there? It's got good, to be a Midas Touch stock, a top Midas Touch, you got to have 3 months of good price history just to qualify. So this isn't like some stock that got a piece of news and went up 16% that day. Those stocks do tend to fail within 2 to 3 days from that announcement, almost universally. Okay? These are stocks that have already established good trend. And then we're exploding current. Let's see how these do, Jerry. There's 21% right there in a much better quality stock overall. We got 25s. All the way to now is fine. But that proved the point right there. How long was that test? That was about a month. 20. Anybody happy with 28% in a month? I'm starting to worry about you folks. You know what I'm saying? Oh my. Linda, seminar's over. I'm just kidding. All right. So 19%. Now, what Jerry just illustrated there, you take it all the way to current, it's 19. Take it back 5 days, Jerry. Close as you can. 21. See, that's starting to slip away. Okay? So there was great opportunity here. Real great opportunity. Now, if we go back to that market timing graph, what I'm doing for you is showing you the cycle in which you want to think about attacking the stock market. You want to be, from what I've showed you so far, when do you want to be most aggressive? At the bottom. When do you want to start taking a little of that risk off the table? High momentum. Underlying trend is above 1. MTI is above 1. Okay? And then when do you think you want to become really risk adverse? How about right now? MTI is 1.6. So I can't take questions, actually. I'm trying to do 30 minutes here, and I got a lot to cover, okay? So the reason I would say you need to be careful now, not just because price is down 5 days, what happened the last time the MTI got up here? What did the market do there? What happened the prior time to that, the market got up, the MTI got up above 1.5, 1.6. All right, so when the market gets up to 1.5, 1.6, and the primary wave turns down, and if you get even better than that, follow through the next day, typically the party's over. Don't worry, we'll have good news again tomorrow. But that's the situation you're in right now. Typically the party's over. Okay? At least for the very short term. I don't mean that it's over for 2024. I think there's going to be a big party in 2024 at some point. Okay? All right. Let's get out of here. We'll see. Who knows anymore? All I know is follow VectorVest. That's all I know and all I care about. Let's get back into the PowerPoint. But that's the cycle. You want to be most aggressive at the market lows. You want to bottom fish. You can do that with blue chips if you want. We have blue chip searches. Or you can go as aggressive as a bottoms up. We have one called Jailbreak. Jailbreak did very, very well from the same date. I think just about the same as bottoms up did. And another one of my favorites is Blers Bottom Feeders. Okay, typically a very, very good strategy. I'd like to give you guys some names of strategies that apply to the situation. So right now, bottoms up is the best one that we've got. That's why you want to stay plugged into that trading system viewer. But some typical names to look for are Jailbreak, Blers Bottom Feeders, Russell 2000, and really the stop ascending one is pretty good for the S&P. Okay, so those are ones to focus on. Now we talked about buy and hold high RS stocks in all markets, so I'm going to skip. We did this morning. This is the birthday game. Okay, in fact, that's the very same test I showed. What I was going to do is show you that equity curve and show you that hey, it's not always a party. When you try to do that. So that's why Dr. Delito created the riding the wave methodology, because it just makes more sense. And at the end of the day, you end up making a lot more money when you do it and do it right. Okay? So buy stocks long on up waves, sell stocks short on the down waves, and don't replace them. I would like you to put an asterisk. I actually meant to do that. I want to throw in a little caveat. It is very treacherous to short stocks in bull market scenarios. And what kind of, even now, what kind of scenario are we in? Bull market. Has anybody tried to short stocks over the last couple of years? It has not been for the faint of heart, to say the very least. Particularly if you tried ballistic new highs and Vern's vultures and some of these things. Look, we've learned this, and I've been communicating this same message I'm communicating now for many, many years right here in this room. And that is, best thing to do is protect capital like Jim showed you earlier, okay, using options or go tighten stops, go to cash, think about contras, particularly non-leveraged, until you gain a little bit of experience. Levered contra ETFs are about the most difficult thing I've ever tried to trade, and I'm a really good trader. Okay? So about the best advice I can give you, if you've got a reasonably good profit you feel good about in 2 or 3 days, you go ahead and take it. They move back and forth so much they make you make a lot of mistakes if you're not careful. 3 and 8 moving average works very, very well. 3 and 8 EMAs. 3 and 8 EMAs. About the best I've ever seen. Gain losses, percentages, Rotsa ruck, Raggy. Okay? Okay, let's go. Now, one of my favorites, we said earlier this morning, really one of the main reasons I put this one in here is it levers something I said this morning. The experts on TV tell you, hey, just buy a little bit of the S&P every month. Doesn't matter if it's going up or going down. You know, it's going to go up over the long term eventually. What are those average annualized rates of return roughly? Anybody want to venture a guess? 8, 9%, 9% usually top end, high end. It moves, right? It fluctuates. Depends on the years. How about a compounded rate of return of 13% and a very easy way to get there? That's a compounded, not an annualized. That's a compounded rate of return. Okay, now the total gain, 338% over a nice swath of time. And so on the next slide, what we're going to see, I think, is the equity curve. I'm going to show you how you can get to this strategy in VectorVest and how it's going to tell you everything that you need to do to be able to get this kind of performance in the future. Now, I saw some folks on the chat earlier indicating things like, well, did you see the performance of that trading system over this year, right? Or that year, right? You're missing the message, man. It's not a one-year game. Anybody here thinks that investing for your future is about this upcoming year? Look, there isn't any system anywhere on the planet that makes money every single week of every calendar year. If you ever find one, you let me know, because I do it for a living. I've seen everything out there. What you need is a system that's going to work over time. And what happens to most people, you want to know why they fail? They follow a system like this. They say, what the heck am I doing? I'm down 20%. And what do? They quit. And what happens next? It goes up 60% in the next 3 months. Okay? Don't be that person. You're getting in your own way. That's the biggest battle there is in the stock market, is you keeping yourself from getting in your own way. What you got to do is follow the system, and you stick with that sucker. Chappell's Champs hasn't had the best year. I'm not going to stop trading Chappell's Champs. Actually, it was the short strategy, like we just talked about earlier. Shorts have been miserably tough. Chappell's Champs still picking great stocks. We showed you earlier this morning, okay? You stick with it. It doesn't make as much money as I'd like every year. S&P 500 winners isn't going to make you as much money as you'd like every year. But I guarantee you it's going to make you more money than just about everything else over the longer term. Okay? Am I being adamant enough about this stuff? I can be more. All right. Man, I'm starting to sound like I live in the South. I got to watch that. All right, riding the wave with the Magnificent Seven. One of the best ways we've seen to manage them. Now, look, guys in the chat, if you're in the Jockey Club, how many times over the last 4 years, maybe 5 years, have I said, if you don't own NVIDIA, you got to tell me why? And if you sell NVIDIA, don't sell NVIDIA. Where's Jim? Jim shows you how to protect NVIDIA, okay? The Magnificent, anybody think the Magnificent Seven are not going to be so magnificent 10 years from now? Okay, good. You're all smart. Right? So they're falling a little bit out of favor now. Why are they falling out of favor now? They've had a magnificent run. And money managers are sensing that we're still teetering and possibly heading towards a potential recession at least. It might be not severe, whatever. So what are they doing? They're starting to take that money, put it in catch-up stocks, stocks that haven't gone yet, that they think investors will try to buy. They're putting that money in very safe dividend-paying stocks that generate income. Short-term yields on bonds aren't what they were, so now dividend stocks are becoming more favorable again. But there will be a time where the Magnificent Seven will ride again, and I don't think it's going to be as long as some of you might think. Has anybody seen NVIDIA's value in VectorVest? We got to show it. Go to VectorVest. I'm not showing it. I don't care. I'm going to Ray, we're staying until midnight? Yeah. Ah! All right, graph that sucker. All right, now it has not been a good performer over the last 6 months. I can tell you that personally, right? But put value on there, man. This company is making so much money, they have no idea what to do with it. And I know China this and China that and everything. You know, look, anybody ever heard of AI? Everybody's always asking, you know, what's the best AI stock out there? This little $3 gamble over here, or that $1 gamble over there, or that $23 gamble. No. This is how you want to participate in AI, among others, okay? But these guys are, look at that, look at this earnings. Look at the earnings. Does it look like it's slowing down? I'm not going to worry about NVIDIA till what? It starts slowing down. Okay? All right, enough. See, I can't help it. I'm going to do my best, Ray. Let's go back here. Look, this little system right here, let me show you where to find these guys really quick. Go back over into VectorVest. And go back to Trading System Viewer. So he's going to go to Viewers, Trading System Viewer. And near the top, actually, is going to be both of these guys. You got the Magnificent 7 right here. It's done 60% this year. And it's really slowed down over the last, really, 6 months, if we had a 6-month indicator in there, okay? We don't. We have a 1 and a 3. You can see there across the top. But you can see it really flatline on that spark chart, okay? So, yeah, it's about time they started moving in other directions, you know, for now. But this system's smart, man. And what does it do? So if you want to know what these systems do, what you do next is you come up here to the top, click Trading Details. Now this one uses the GLB RT Kicker Timer. And so you're going to buy these 7 stocks after a confirm down. What happens? You get a green light in the price column. Okay? And it's confirmed by the relative timing moving averages. Remember that? Okay. And then you're going to, if you click on the details here, no stops. Does that scare the tar out of anybody? Yes. These are the Magnificent 7. I'm going to tell you, you know, it is a pretty wild phenomenon, but generally speaking, you do better without them. You still shouldn't do it unless it's the Magnificent 7. These are VectorVest approved. And a lot of it comes down to the what? I'm worrying about you again. The market timing. A lot of it comes to the market timing. So our suspicion is that if the market goes on a good run, the Magnificent 7 are going to ride again. Don't you think? Yep. Yeah. All right. So everything. Now the cool thing is everything that you need to do is in here. You know. So you can turn that loose into a portfolio and just follow it, or you can come right into this viewer and right where sorry Jerry, right where he was. If you scroll down below the fold, go back to Trading System Details. If you scroll down below the fold, you'll see the stocks that are in there. Now, you may not get exactly the same price. Let's not worry about those kinds of things. Let's not try to get better prices. Let's just follow the general guidance. That's what matters. Anybody ever heard of Pareto's Law? 80% of the result with 20% of the effort. Right? How hard would it be on the day of a green light, well, to know what the Magnificent 7 are and just buy them? And then when are you going to sell them? Confirm down. And that's it. That's the strategy. Can anybody not do that? All right. Just checking. You don't even need Trading System for that. Buy the 7 on first confirmed green light, sell them on a confirmed down. That's it. That's your strategy. I got to pay taxes. Good for you. I think you can afford them. I about had a heart attack. 2020. I mean, I saw that tax. Whoo-wee. All right. We've already gone through bottom fishing. I've really taken you through the whole cycle. Now, I do want to talk a little bit about this graph that's in your slides. Just quick. I'm sorry, Clark. Real quick, though. This kind of proves the point. This was one of the best bottoms. You'll be lucky to ever see a bottom like this again. Now, there's been 3 of them of this magnitude in the last 70, 80 years, for example, okay? But where is the vast preponderance of this movement? Is it in the first couple weeks to couple months, or is it in the last couple weeks or couple months? First couple months. From that final peak there, so when you stop going up for a couple of weeks, shut it down. Give it a couple of weeks. You'd be surprised. Markets don't move up every single day. Don't move down every single day. There's usually some bumps and wiggles, right? About the best way I've seen to terminate a campaign is issuance of a confirmed up. I like to just take more of my money and put it somewhere safer. Or if you want to try to juice this baby as long as you possibly can, with as much rationality as you possibly can, just wait till you don't go higher for a couple of weeks. And even if you end up closing out here, good for you. You know it? Jerry, just give me a rough estimate there. 100% right in this area. That's 100%. You're up 100%. You're up 100% in 6 weeks. I rest my case.